Hello friends, I am Geheng Gosai and today we will talk about the most awaited Zomato IPO. This year there has been a line of IPOs and Zomato is one of them. Its important dates, price band, and lot size has not been finalized yet, but they have filed DHRP with SEBI. So we thought of telling you all the important updates like its business, revenue model, earnings and the COVID impact, the industry outlook, and its strengths and weaknesses. But before that, don't forget to subscribe to Business Vala. Let's talk about Zomato as a company. Whenever you hear Zomato you feel like eating something. But did you know that it was started in 2008 as a restaurant discovery website and today it is one of the biggest food delivery app in India? And when they started delivery in 2015, they were not alone. There were many companies already doing that like Swiggy, Tiny Owl, Olacaf, Foodpanda, Runra, and Scootsie. But today the main competition is between two companies, Zomato and Swiggy. But to give them competition, another big player is coming, Amazon. I will tell you about this further in the video, but let's first talk about Zomato's revenue model and how do they make money. Zomato was a restaurant discovery platform that used to tell us everything like dishes, menu, location, etc. It is the largest food-focused restaurant listing, reviews, and online table reservation platform in India. It makes money through those restaurants that pay them to improve their visibility. As of December 2020, it had 3.5 lakh active listings on its platform. Other than this, it has an exclusive paid membership named Zomato Pro which provides flat discounts on selected restaurants and dine-outs. Hence, Zomato makes money from this membership too, and as of December 2020, it had 1.4 million such members. Zomato has a subsidiary company called Hyperpure which provides raw materials to restaurants. It not only helps them to forecast demand but to source raw materials such as grains, fruits and vegetables on a larger scale. But is a part of the bundle services aligned with food delivery. This business was started in 2019 and as of December 2020, it has supplied raw materials in 6,000 restaurants in 6 cities, and lastly, it makes money through food delivery. It acts as a delivery agent between restaurants and customers. They take a commission from restaurants and delivery charge from customers. They have operations in 23 countries other than India like UAE, Australia, New Zealand, Philippines, Indonesia, Malaysia, USA, Lebanon, Turkey, Slovakia, and Poland. But the company's 90% revenue is generated from India only. Let's see the impact of COVID-19 on the company. In the first quarter of 2021, there was a significant impact on its business. It hit its lowest GOV, meaning gross order value, in a quarter in 2FY, after which the food delivery business saw a good recovery. In Q1 of 2021, its GOV was Rs 1,100 million, wherein in the third quarter, it was Rs 30,000 million, which was more than the third and fourth quarter of 2020. Let's check the industry overview. If we see the food delivery business, in floor Y21 India saw contradictory moves. The first quarter saw a very bad time, it was at its lowest, whereas in the third quarter, it was on its all-time high since people were not able to go out and eat. They tried making up for it by ordering home online. I was so happy when I could start ordering food online again. Anyways, the Indian food market is divided into 3 channels: dine-in, takeaway, and delivery according to CLSA. Food delivery will see the highest growth out of these 3. The market size is expected to increase to $11 billion by floor Y26 from $3.5 billion in floor Y20. Increasing population, smartphone penetration, expansion to new markets, and higher frequency from existing customers. Zomato's biggest competition is Swiggy and the newest is Amazon. None of them are listed, whereas Zomato is bringing its IPO. Zomato and Swiggy, both are in the food delivery business, but they have different strategies. Zomato is trying to focus on every aspect of the restaurant business, whereas Swiggy focuses on the food delivery aspect, the delivery of food, grocery, alcohol, meat, medicine, and delivery and pickup of every other item. It has a membership of Swiggy Super where it gives discounts with free delivery. Amazon has started test marketing of food delivery last year. At first, they started food delivery only for their employees in Bangalore and then till 1/4 of the city, and has a network of 2,500 restaurants versus 15,000 offered by Zomato. Zomato and Swiggy need to watch out. Let's see what happens in the food delivery section. If we see its financials, Zomato reported a loss in the first 9 months of FY21. The company has close to no debt. The company secured 155 million orders in the first 9 months of FY21 with a total gross order value of 6,169.9 crores, whereas they got 403 million orders in FY20 amounting to 11,220.9 crores. You can gauge the COVID impact through the number of orders. The average value of order went up from 278 rupees in FY20 to 398 rupees in the first 9 months of FY21. The monthly transacting users have grown from 9 lakh in FY18 to 1 crore in 2 years, but reduced to 58 lakhs in the first 9 months of FY21. And the dining out business is still recovering as people are not going out due to COVID. If we observe this table, we can see the total revenue per order and total cost per order. Adding all the commission and other charges, the revenue has increased from 58.9 per order in FY20 to 89.6 per order in the first 9 months of FY21. If we see the total cost, which comes from adding delivery cost, discounts and variable cost, has decreased from 89.4 per order to 66.7 per order. They had a loss of 30.5 per order in FY20 to a profit of 22.9 per order, but it is to note that marketing, advertising and branding costs are excluded from this. Let us now talk about its strengths and weaknesses. Starting with strengths. First being the network effect. It is a phenomenon wherein the product service gains additional value when more people use it. The more people will use it, the more restaurants will get listed on Zomato, which in turn will attract more customers. As of 31st December 2020, the company has 161637 active delivery partners who fulfilled 94.9% of the total orders, and the median delivery time was less than 30 minutes. It has a widespread and efficient on-demand hyperlocal delivery system. Zomato is a strong brand presence that is recognized all over India. Like I said, people hear Zomato and they remember food. Zomato has been successful in retaining customers whose spending has also increased with time, which is a huge competitive advantage. If we see the weaknesses, the company is not profitable as yet and is expected to remain the same as spending is increasing. There were many players, but now only Zomato and Swiggy are left, and now Amazon is entering, which is a very big threat to both these companies. Zomato is backed by Chinese billionaire Jack Ma and Group, meaning it will always be a foreign-owned and controlled company, implying they would have to fulfill many requirements under the FDI policy and laws. They have also said that they might not be able to perform some commercial activities without the government's approval. Now, what do we know about the IPO till now? Zomato wants to raise us 8,250 crore through the IPO, where 7,500 CR will be from fresh issue and rest OFS Infoedge, which is the early investors, will sell 750 rupees CR worth of shares through offer for sale. Zomato may also consider a pro-IPO placement of 1,500 CR. The IPO dates, price band and lot size are still not revealed, and as soon as we get any updates we will let you know. I hope you like it, and I will see you in the next one. And don't forget to log in with Business Vala.